we're very much in the same boat on the S&P on the count. The count is virtually identical in every way. So I basically go straight to the daily chart. Uh, the only difference is how I'm counting this A and B back in here, but still looking for the end of a pink wave B. I think we have it, and that we're going to get a 5-wave structure down to the wave 4 of 1 lesser degree next, which is right at 3,000 on the S&P, right at 3,000. And there's a 20-week cycle trough due in the very late days of February, early days of March. I think it'll take us till early March to get down into that 20-week cycle trough, and then a rebound, and then on down into the 18-month cycle trough due around mid-year. In the case of the S&P, it's suggesting that's in July. I wouldn't be surprised if it bottoms in June on virtually everything. Here's the 240-minute on the S&P. It shows a triangle back here. This is a little difference. And then the beginning of the expanding ending diagonal starting November 20. And 3 waves up for wave 1, 3 waves down for wave 2, 3 waves up for wave 3, 3 waves down for wave 4, and then an A and a B, and then a 1, 2, 3 triangle for 4, 5 to complete the structure. Last week I was developing for you thrust targets for the end of the triangle, the end of the thrust out of the triangle, and that thrust target was at 39.52 and a quarter, and that was ever so slightly overshot. And then we'd have what looks like a reversal down from there. There was also a minimum distance that the purple wave 5 would have to go. It would need to be longer than purple wave 3 was. That minimum was also hit. And so looking in at 15-minute chart, here's that all-time high that occurred on Monday of last week. And the first 3 days of last week, we saw some pretty convincing downward movement. And I believe it easily counts as a 5-wave structure to start. 1, 2, 3, triangle for 4, 5 for orange wave 1. And I've got my Fibonacci retrace target, a best Fibonacci retrace target of a 0.618 retrace of that 5-wave structure. And the market moved up in what looks like a flat right to that level right there. I'm calling this an orange 1 and an orange 2. This is not a really clean 5-wave structure to the downside, but I'm preferring to label it as another wave 1, and then an A, B, C for wave 2. So the overall look here is 1, 2, 1, 2. And then another thing that leads me to believe that that count that should be the main count is a 5-wave down structure on Friday. 1, 2, 3, 4, 5. This 5th wave may not quite be done. 1, 2, 3, 4. So we may get a little bit of a gap down to at the open here in a few hours. And then I think we'll recover back to the wave 4 of 1 lesser degree right here, back to 39.12. And then I think it's on down in wave 3 of 3 down. Alternatively, here's there is the depth of this leg to the downside supports this alternate count. And that is that, yes, there was a 5-wave down structure. Then we got 3 waves up for wave A in purple, and this would be a corrective leg down for wave B in purple. And notice that it stopped going down right where a wave B of an expanded flat would stop going down, where it was at 1.382 times the length of this leg up here. And then on first glance, that looks like a 3-wave move to the upside, but it's and we would typically need a 5-wave move up from this low to complete an expanded flat, A of the expanded flat, B of the expanded flat, and then 1, 2, 3, 4, 5 to C of the expanded flat. And then a move up. Greg, if you look at his post on YouTube, you'll see that I did make a comment on YouTube specifically about that. And I mentioned the expanding diagonal probably finished in a number of these items that started way back here. So this is likely a completed expanding diagonal. That's a terminal pattern in Elliott Wave, a megaphone pattern. Diagonals are typically deeply retraced. And then, so he was suggesting that maybe this was the 20-week cycle trough, and that would be bullish. And in my opinion, the 20-week cycle trough is still in front of us. The Hertz analysis with no repins is suggesting that there's a nest in early March for this 20-week cycle trough, and so I think that is going to be the way this goes. That we're going to see a 5-way down structure next into early March, and I told David that in public on my comment on his YouTube video, and he agreed that. And see, his take on it was that this movement down wasn't aggressive enough to have broken through a displaced moving average, and therefore this may not be the beginning of a bigger move down. This might be a 20-week cycle trough. In my opinion, it's too early to give up on this breaking through that displaced moving average on his system. And as when you look at the internal wave counts, and I didn't really mention this to him on the chat, I didn't want to get too wordy there, but I can see 5 waves down after a terminal pattern. I can see 5 waves down in every one of these indices, and then followed by probably corrective stuff. So I think that 20-week cycle trough is still ahead of us. I think it'll occur sometime in the first half of March. The only question in my mind is this purple wave 2 done here, or and is the orange wave 2 done here? So there's evidence that we might shoot up here and take out this high, and we might end the orange wave 2 here as an expanded flat, 3 waves up for a corrective wave B to exact typical level for wave B, and then this would probably need to be a 5. It doesn't have to be a 5. This could be a WXY. It could have ended here, but there's still a possibility that it would be an expanding ending diagonal for wave C, purple question mark. It could come back up here, but I don't think we're going to see any more highs. I don't think orange 2 invalidation is going to be taken out, in other words, on this count. Not after that really nice 5-wave structure down there. So there's the S&P. And I also mentioned to David when in my chat with him on public chat on YouTube that there were quite a few items that, like the NASDAQ, that already had broken through that displaced moving average he was looking at on the S&P, and it might be good to look at, what are some of these other indices doing? what are some of the major stocks doing, like Apple and some other things like that. Then when you look across the board, there's, I guess, last week definitely showed some weakness in the markets. And I think it's just the beginning of a bigger move down. And I have noticed that it's pretty common for many Hearst cycle technicians to zone in on the S&P. That's all they ever look at, and they don't look at all the additional items that I look at, every week for subscribers. And so I can kind of, if one item is lagging or leading, I have a much better idea because I look at so many items. So in my opinion, there's a lot of evidence that where the market has started just beginning to show some weakness here.